Builders, assemble. We're doing Insurance 101 with Chuck. I want to call him Mazzanti, but I think it was Mazzanti. Anyway, with Chuck. Great conversation. I think his family business story. We talked about ESOPs. We talked about captive insurance, a bunch of stuff I don't know much about. But I think for those of you that are listening that run a small business, it's good insight. And would it be interesting to see what he does with his podcast? You commented on my bear so my wife works for the team. I wear this because I get free gear. I'm not really that big of a fan. So I must advertise that.
Well, if you got too much bear swag and you want to float it my way, I'll take it off your hands.
Very good. I get one. I get my salute. I get my salute to service sweatshirt every year. And that's my, I don't know. That's a good question. Well, listen, dude, this is fun for me because you solicited me and then I got to out-solicit you and drag you on my podcast. So what I like to do, I'll give you an intro. You're in insurance and you specialize in construction. I'd just love for you to just tell your builder story, how you got to where you are today. And then I actually, to advertise, I'm going to be an antagonist, lawyers and insurance people, right? And accountants, the three that we don't want to talk to. So I'm very curious who your target market is. And then my audience would be made up of a lot of small business people that don't understand insurance. So, I shouldn't say that. If they're like me, they don't understand it. They don't want to understand it. They just hate it. And I think that's probably failed wisdom for all of us. We could probably have a better mindset about insurance. So with that, Chuck, just tell me, were you born and raised Chicago? Take me through all the key moments of life that brought you to the day where you made the woeful mistake of asking me trying to sell me insurance.
For sure. Yeah. Like a lot of people, I think growing up, right? I wanted to be a fireman. Didn't have insurance on the radar with the exception of it was kind of a family business. So, was going to college. My dad was working for my grandfather's agency. And then one day went to pick up my dad to go to my cousin's graduation, who ironically enough is a fireman today. And my dad was dead. And so at that point, it was kind of a pivotal moment in my life where I was going to college. I found my dad passed away. Do I step into his shoes or do I forge ahead? And I ultimately decided to step in his shoes. So I got involved in the family business, stepped away from college at that point, and been in the business ever since. And so it's my understanding that you're a part of a family business. So I think you could kind of understand, Kevin, the unique challenges, right? It's not always rainbows and sunshine like a lot of the outside world thinks. Sometimes it could be a lot more difficult because you're a family member and your ideas may not be noted like they would in an outside company that you just work for. So I cut my teeth though, did a lot of car dealerships starting out, which is a tough sale to be had. Like you, they'll flip the script on you real quick and get you into a car before maybe you sell them an insurance policy. But I'm grateful that's everything I learned at that stage of my life. But I would like to say I graduated from that agency and started to work for bigger agencies. And that's kind of what was interesting with your post. Always want to work for privately held firms. And as I went from agency to agency, they were getting acquired by either publicly traded firms or private equity backed. And that didn't necessarily resonate with me. Some of the things they do with their employees, comp structure, forward thinking strategy is more serving the shareholders, right? And the money machine as opposed to their employees, which in essence, if employees are treated really well, they treat their clients well, the money stays locally, so on and so forth. So I was working for the largest publicly traded broker and had an opportunity to come over to Christensen Group, which is 100% ESOP. And so I was in a really good spot, writing a lot of big contractors but I'm in my mid 30s. And I said, if I'm going to make one more jump, Why not join a 100% employee owned shop? And so about a year and a half ago, I started up our Chicago location. We're based out of the Twin Cities, Minnesota. We could get into that if you'd like, but that's kind of what brought me to present moment.
Take me and one, I'm sorry for your loss. Is it okay we talk about that, or you want to stay away from that?
No, no, I'm an open book, man. That's kind of what shaped me. I lost both my parents in my late teens and early 20s, and so yeah, man, I'm game for anything.
And so one, that's cool that you can talk about it. Two, yeah, man, I'm sorry, but there's probably a level of it's like made you who you are, right? Um, but yeah, so going to school, you're going to school for what? I understand you want to be a firefighter. I like wanting to be a firefighter too. I went ahead and just like walked away from the business, did my Marine tour, and then came back. But what were you going to school for? You're in college. I love that you gave up school, by the way. I think that was a good move. I don't think I'm encouraging my kids to go to school unless they want to be a physicist or something. But
Correct. I'm fighting the same fight with all. I don't have kids, but I get a bunch of nieces and nephews, and I'm kind of. I think they're sick of me talking about like unless you're going to be a doctor,
yeah,
something in math. There's ways to educate yourself outside of the typical structure.
we are very aligned in that. But so you were what were you studying?
Just general business administration
Okay.
was a trick.
And then out of blue, did mom and dad pass separate? And that's when you said, "Hey, I'm going to tell me, do you mind walking me through?" I didn't quite get that. I didn't reconcile the decision.
Yeah, yeah. So my mom passed away 2 years prior. So that obviously you remember this stuff like it was yesterday. So it was May 1st, 2011. My mom already passed away in September of 2009, and my parents were split up, living with my dad at the time. And it was my cousin's graduation from high school, and so I was going to pick up my dad and then head out to Crystal Lake to go celebrate that, and essentially wasn't answering the door. You start getting nervous, you get in, and yeah, I found him there. So he essentially had a aneurysm, and that was at that point it was kind of like, hey, my grandpa was like, you want to get in the business, and he was a unique character, and so there was a bunch of things that happened, and so I made the decision of, okay, my dad's worked in the family businesses for all these years. I don't want to let his work go to the wayside, so I want to carry on his legacy and kind of keep moving the good work he did forward.
Okay, there you go. It wasn't your ability to tell the story; it was my ability to listen. So, Grandpa owned the insurance company. It was and Dad was working at the insurance. And what was the name of that company?
Jim Mazzanti Insurance.
Jim Mazzanti. And so this would be good. That's good. I was going to call you Mazzanti, so that's good. Is that
Yeah, you could
Mazzanti?
Mazzanti.
And so before I go into like brokerage, because I was going to ask this question, I think it's helpful because insurance, a freaking racket over there. But so Grandpa had the business, Dad's working in the business, and it is and are you the only? What about kids, brothers, sisters? You're one of how many?
Yeah, so me and my sister, she was on her own path, getting a degree in psychology. So she was separate from the business. And then my grandfather's shop was all family. So my aunt was working in it, my uncle, grandma was the bookkeeper, and then my dad. So that was the makeup.
And we're at 2011, and it's like, okay. And so were you? And I'm asking, this is selfishly, because when I went to college, it was always known I was going to get back involved. You were still figuring out if you were going to come back or not at that time. You were like maybe going to do your own thing, or
Yeah, the plan wasn't. So I worked there on a part-time basis and got licensed and all that, but the plan wasn't to work in the family business.
okay. So you're going to school and then so you feel this burden and you go do the family thing, and then did you guys sell to Gallagher, or what happened to the family? Did it kind of fold up, or because now you're working at Christensen, so I missed a few steps.
Yeah, yeah, there was some inner family politics that it was going to be kind of a carrot out in front that I don't think I was ever going to get, and unfortunately, I think that was kind of part of my dad's demise. And so, through the help of my wife, after some years of trying to make sure my dad's legacy got followed through, I think the writing was on the wall that it was always going to be one day, one day, one day. Um, and so I had to break out.
Is grandpa still around?
No.
Were you able to preserve that relationship when you left, or I mean, obviously at that age, you should have let go a long time ago, right? I'm sure I can assert that. And dude, if you don't want to talk about your family, like we can move on too. I wasn't planning on.
No, man, I'm an open book. I think regardless of if you're working for a company, you have your own business, you're in a I don't care what type of industry you're in, was this is human level stuff, right? The longer you live, the more loss you're going to experience and more hardships. So I think there's a lot of things to be gleaned from my experience, both good and bad. So I'm an open book. It was strained, man. It was my grandpa was a type A, kind of his way or the highway type thing. So it was definitely strained. And before he died in 2017. There wasn't a ton of a relationship there at that point.
Got it. And so when did you? So you get involved in 2011, and when did you finally say like, "F this"?
It was right around 2016.
Got it. Okay. Yeah, dude. Another time, another conversation. I've been dying to explore like the idiosyncrasies of family business. Like just like I've been in a Vistage group, and like everybody, it's like it's so funny, man. Like it doesn't matter if it's small or big. It's a pain, and it's like, I mean, it's great too, right? But I mean, and he's here visiting, so I'll have to look. I don't know if he can. It's like I have to have some filter on, but it's I mean, his story and my story. Like if we were not even in the same room, not even on the same, it's a different book, but I was fortunate we got through it. And so I'd love to jam on that, maybe offline or in a different set. But so
100%.
let's talk. So you tell me, I mean, let's just like do the right thing for smaller businesses, and I'm speaking from myself as well, and I don't like we'll do just over 50 million in revenue this year, and then we're slated for 100 next year. So I don't know that I get to call myself a small company anymore. I think we get to be mid-size. I don't know what that, but I know this, and so I just want to like lead with some vulnerability for particularly my listeners. Like I freaking hate accounting, and I'm an accountant. I despise the justice system. I think it's like on its face. It's like it should be called the injustice system. I think it's hypocrisy within the name. It's just a freaking joke. And anything that promotes it sucks. And then I used to feel the same about insurance, and I haven't changed my mind. It's a necessary evil. But my big bugaboo with insurance. So it used to be like, fucking got to pay it. And they don't want to pay it out when they're there when you don't need them, when you have to pay it, and then not there when you need it. And like I've come full circle that that's not necessarily true. And like a good relationship with an insurance person is like a big deal. But my issue, and I just want to like get this out into the ether. This is really a disclaimer. This has nothing to do with the conversation. Is like I believe that shared risk is like awesome. Like that is so pure. That is like the most beautiful thing like that got constructed is let's share risks so that like when Kevin has a hard time, the Mazzantis, sorry, was it Mazzanti? Mazzantis. The Mazzantis.
Either way, man.
The whole fucking neighborhood is going to take care of Kevin and Kevin's family if something catastrophic happens. And like we can pool this risk and subrogate it and like, dude, to me now it's the grossest business around because like that's not what it is. And like I guess somewhat it still is there. So that's my big but getting back into like entity and all of that, I'd say like one, who do you target? You came to me and I think you said you were like focused on construction. Tell me how you came to be a construction guy. What's the size company you want to work with? And then the big thing I'd like to get a global, like I'd like to take, because it's hard when somebody's trying to sell you something, you lose the ability to advise them, right? Because it's guarded, right? I'm in a hostile conversation. So I want to like take that guard down and like, what do they need to know about insurance? Like, and more basic, so we've got health insurance, we've got workman's comp, we've got GL, general liability. And then are those the big three? And what else is there? And so just like talk to, if you don't mind, $1 million, two, three, four, $5 million, 20 person teams. Like, what do they need to know about insurance? And like, I'm asking for full humility, as I like probably don't have my hands wrapped around this nearly as good as I should.
Sure. Yeah, and I think, I mean, I hate insurance too, right? There's a reason why there's a middleman. If it was simple, I wouldn't have a job. So no policies created equal. And it's really, if you have an open and honest relationship with both your broker and insurance carrier, as opposed to seeing each other as adversaries, that's the first step, even though that may seem cliche. And contractors, I think, get a bad rep in the insurance space, right? Behind closed doors, an underwriter may think, oh, contractors bid us out every year because they treat it like their business and they get bid out. And it's, even though I understand that to a certain extent, I think a lot of contractors, and this doesn't matter if you're a 10-person shop or you got 1,500 employees, underwriters have a finite amount of time to work a file. And so if they've seen your company every year for the past 10 years, whether it's with your existing agent or maybe your agent and a plethora of other agents, and they didn't get the business on the 11th year and you need them because let's say Travelers dropped you because of claims or whatever. And Hartford was the one that saw your risk for 10 years straight and didn't get the business. In year 11, you actually need them. You think they're going to put their best foot forward? Or are they going to say, hey, this is the 11th time I've seen it. I got 3 other risks I'm working on. This is the first time I've seen it. They're only working with one agent, so I control it and I know what I need to win. I know pricing, terms, what's important to them, what blemishes they have. Are they trying to cover it up, or are they speaking frank on, hey, this is what happened, but this is what's being done to rectify it and why it won't happen moving forward? Who are they going to work on, Kevin, in your opinion? You know?
Yeah, so take me, because you spoke over a lot of our heads, and I think I got what you're saying, but that was great. So what I'm hearing you say is like, you got to work the relationship, and everything's relationships, right? So you got to, and I firmly agree with that. We can talk, but so I don't think a lot of us even understand how our stuff gets shopped. So am I correct? The big ones: workman's comp, like health insurance, and GL. Are those like work comp and GL?
Yeah.
What would be the big brackets?
Sure, yeah. So if I go back a little bit, and feel free to interrupt if I say something. I
No, it was good. By the way,
it's
it was good. I just want to go. I want to go even slower. That's all.
Got it. So let's for a second take health insurance and employee benefits and put that off to the side, because that's a beast in and of itself.
Yep.
So and we could touch on that. But
before you do, is that generally, because I believe this to be true, and is that is like if I'm sitting at my table, because like, and so when I'm running a business, it's like, what do I need to know? And like, I mean, my advice to anybody would be like, get somebody you can trust, right? Don't learn this inside and out until you get bigger. But generally, health employee benefits is that's not like, it would be ill-wise of me to be consulting my GL and my work comp guy about that. Is that correct? I've found that to be true.
Okay. Correct. And in my opinion, there's so much nuance to it. We do it as an agency, but I partner with someone that's all they do. I know about it, right? Because I've worked deals hand in hand, but I would never intimately advise a construction company or manufacturing, or name the industry, on employee health and benefits. I would always pass that to an expert at the team, because you can't know everything. There's laws are changing. Different states have different laws. It's too big of a beast, in my opinion.
And so we'll get to, is GL and work comp the two big buckets for a company that they need to find? Like, yeah. Is that correct?
Yeah. So general liability, workman's comp, business auto. Even if you don't own autos, we could touch on what you should have as a stopgap. Umbrella insurance. Those are the big 4 pillars, but I would argue pretty much everybody should consider cyber insurance, especially with what's happening with AI, and employment practice liability, because someone could always say you discriminated against them.
I've
And
I've
so I
I've
would,
been sued for that. Somebody made a joke about Julio's, and we ended up using our employment liability insurance. So I'm not proud of that, but it's true.
right.
Okay, so let's so what if before we move on, help me understand. So like the players, eh, when I come to you, you're not going to do my homeowner's insurance, right? That's going to be somebody else. Like my homeowner's insurance is somebody else. So I need a broker and agent and a broker agent and maybe carrier relationship there. And then my health insurance for my people, is it another? So am I like assuming I'm going to be like I'm a risk mitigator, I'm optimizing insurance, I want this is important. Do I need three? Like generally, like do I need three advisors, or is that probably the right move? And I understand like at $1 million, probably not. But let's say my goal is to get to 10, 20, 30, 40, 50, and I want to be well insured. Would that be the right? Because I just want to be clear. I found this with lawyers too. Is like that your litigator is not your like corporate write up agreements guys, right? Like you got a different one for real estate. Everybody has their niche, everybody has their specialty. So is that wise counsel, or am I like understanding my business insurance is probably more important than my home insurance, but it's all relative.
Yeah, I think it's all important. I wouldn't say the business insurance is more important than your home insurance. However, again, could I personally write your home insurance? Of course. But am I in the day-to-day following every single carrier's endorsements? Like I had a personal claim where tree roots came into my sewer pipe, and that was a specialty coverage. Normal homeowners doesn't respond to that. So there's so much nuance that it's a yes and no. I would say you don't want Chuck insuring your home, but if you're with a good agency that has siloed departments that also work in tandem, that's kind of like striking the perfect balance. So then you would go to the personal lines guy or gal that's all they do. But if I'm like, let's say I insured you, right? I still manage your relationship soup to nuts, and I would just come out with our personal lines person. If you had day to day questions, let's say your son or daughter turned 16, now your personal auto is going to be a nightmare. My teammate is going to advise you. But if you had an issue, hey, Chuck, you know what? I'm just not happy, or they're dropping the ball, or I'm not getting the same service. That's the benefit of working with one agency. So the point person could make sure your employee benefits is running smooth and you're getting the level of service that you expect. Same thing with the home and auto, but I would be all things business. If you can't get that with an agency, then yeah, I wouldn't. If I had my own shop and I told you, Kevin, I'm going to do your home, I'm going to do your employee benefits because I'm licensed in that, and I'm going to do the business. I wouldn't recommend that because that's a jack of all trades and you're a master of none.
Very good. All right, what else do we need to know? Speaking to the business side of things.
Yeah, so I'll kind of walk back or slow down on the first point I made. The biggest mistake, in my opinion, that contractors make is bidding out their insurance every single year. And here's why. Only one carrier is going to win your business. Furthermore, if you bring in other agents outside of your current agent, are you really taking the time to sit down with them and explain your operation? If you do commercial and residential work, that changes the insurance marketplace, meaning carriers, on who has an appetite for you. So is that being explained correctly? If you have an open work comp claim, is it being explained, hey, here's the reason why it's open, and maybe this guy or gal isn't back to work? Or is it just a piece of paper, a stagnant loss run report that the underwriter is now formulating their own opinion on you, that you don't even know what their opinion is, and then that lives forever in a system? So you come back 7 years and go to Hartford, let's say, they're going to check the system. And if they have a perception of your company you don't even know what that perception is. A and B, if it's a bad perception, now it's got to be unwound, and that's really difficult to do. So my biggest advice is if you want to keep your agent, I hear it all the time, I want to keep my agent honest, have some strategy and forethought, and don't just race to the market and let all the brokers that are calling you in really interview other brokers if you're going to go that route and learn about their strategy and see what they're going to do for you, because at the end of the day, anybody could get you multiple quotes from multiple insurance carriers, and that's like table stakes. That's like me coming to you and saying, Kevin, I want to work for you, I got a hammer. Okay. There's a lot more you need to know. That's very elementary level.
Let's break it down. This is super informative, by the way, because I don't even know what we're doing with insurance, but I do. I have a cousin that's like, he advised us and saved us like $500,000. So like, I don't know, and got us better coverage, right? So the whole cheaper is not better. Anyway, we'll save that. But so understanding the players. So you've mentioned 1, 2, 3, 4, I think. So we've got underwriters, we've got agents, we've got brokers, we've got carriers. I understand the agents and brokers are typically related, but I'm actually not exactly sure how that works. But what I've heard you say is like, well, do I go out like, so let's say I take Chuck's advice and I'm like, every 5 years I'm going to shop this. And so I've got agents working for brokerages, and those are married, correct? Agents and brokers are like, so those are the same office. And if I said the word, those are the intermediary between me and the carriers. Is that fair to say?
Yeah. So there's, without going, but putting everyone to sleep for this conversation, we'll say they're synonymous. Broker, agent, let's just say they're one and the same for this discussion. And carrier, underwriter, let's say they're one and the same, with a little bit of a caveat that the carrier, let's say it's Travelers, but who's the underwriter? Because if you have an underwriter that wants to write you and another underwriter that doesn't, it could be two wildly different outcomes, even though it's the same Travelers.
And when you say that, and I understand we will put people to sleep, but I think sometimes it's like living into the nuance. So when you say who's the underwriter, is that like I'm going to Travelers, and depending on the day, the one underwriter within Travelers is going to want to write me and one is not? Or is that also a third party? The underwriter is outside of Travelers, or is anyway?
Underwriters and a part of Travelers.
Okay.
And yeah, every agent has not, there's going to be redundancy, of course. They don't have a million underwriters, but oftentimes there will be an underwriter that I have at Travelers that maybe 3 other agents that you're talking to have different underwriters than mine. And then furthermore, it's very important for us to maintain our relationships with our carriers and underwriters, because then if I have a lot of business with them, but that's just one piece, I also treat them really well. And I don't lie or roll them on an account just to get an account. Now they're going to be willing to do me a favor if I ask and it makes sense for them, versus maybe someone else, they use Travelers every once in a blue moon. And you say, you know what? I want to work with Doug instead of Chuck. And Doug goes to Travelers. He doesn't have nearly as much leverage as maybe I do. And the same could apply. Vice versa. Maybe Doug has been putting a ton of contractors with Hartford and I haven't. Well, then you're going to want Doug to go to Hartford, not me, because once you go to an insurance underwriter / carrier, with the exception of maybe 3 or 4, it's first in, and the rest of the agents are blocked out. And that's when you hear broker, record letter, AOR. Now it's, I didn't realize that. I want Chuck to work on it. Well, now you got to sign a letter. I got to send it to Travelers. They got to wait 5 to 10 business days. Doug's going to come crying to you. It muddies the waters, and it already gets the carrier a little bit apprehensive, because they're like, what's going on here? They're talking to everybody. Brokers are fighting over it. I'm not super excited about this account now.
Okay, so this is I think hopefully, maybe everybody knows this, and I'm just the only idiot that's grown a company. But so first in, so let's talk. Let's just say nobody listened to the podcast and talked to Chuck, and everybody's quoting every year. And I'm just naive. I'm like, okay, so 5 agents got to talk to five, got to talk to 5 agents, 3 to 5, and then these other 2 guys solicited me. So I got 7 agents, and you said first in. So like I talked to you, my incumbent first. Obviously, it's coming up for renewals. Maybe I'm telling like that I'm going to shop because I shop every year, and we have the relationship isn't much. So I'm big enough that the account is attractive, but it's annoying. I'm assuming this is most of your cycle. Is every year they're going to renew because they're like, which I can completely see. Like I'm trying to do this with the GCs too. Everybody's low cost. It's like I got it. I hear you. But so nobody's listening. So there's 7 agents. How many carriers are there like on average? Are there, like, and I have this, like, there's 5. Is there 7? Is there dozens? I mean, how tightly held is the carrier makeup?
There's a lot, and that could be an hour and a half in and of itself, but I'll simplify it in a quick overview. So you have the nationals that all of us has heard of. If you watch TV, you see the commercials. You got Liberty Mutual, Travelers, Hartford. Those are CNA. CNA is huge in the construction space. Those are some of the big ones. There's more, but that's kind of the big 4. Then you have regionals, and there's
Hold on,
super
give me the big
regional.
sorry, give me the Liberty Mutual, CNA, Hartford, Travelers. Did I miss one? Those are the big 4.
No, that's
big
those
4.
are. I mean, there's more, but that's
No, got
today.
it. So these are like the big 4 of the accounting world. Same story.
Yep.
Okay.
Yeah, and they're gonna write accounts from across the nation and internationally. They don't really have a weak spot as far as if you're like, hey, I'm going into West Virginia to do work, they're going to be licensed there, versus the regionals may or may not. So you have super regionals where they're licensed to do business in maybe 35 to 45 states, but maybe they don't want to mess with California, for instance. And then more hyper regionals that are like upper Midwest and Illinois, or just play in like Texas and the surrounding region.
that's okay. So because like we have this, I'm talking the lay people, I don't know. Maybe I'm speaking on behalf of Kevin and Kevin only, but like I just figured it was like, you got State Farm and Allstate and Progressive, or like, there's like 4, but it is competitive within the carrier space. It wouldn't be like a well-controlled monopoly, because my image is that it's like, so it's okay. No. Okay. So then we've got lots of options. If I'm working in multiple states, I'm probably limited to the nationals. Likely we'll end up with the big 4, but there are some people that can compete. Is that fair to say?
Oh yeah. Yeah. I wouldn't, like Cincinnati Insurance is going to be able to do most states. They're a really good regional. Okay. West Bend is a very good regional. Secura, Acuity. There's some serious regional players that, unless you want to be in all 50 states, and I don't know if you want to get into this or not, but I do a lot of alternative risks. So there's ways, if you're big enough, and big enough meaning at least 150,000 in total premium, but I would argue that should be at least 250. We could create you a group captive, which then you're your own insurance carrier with peers, either other contractors or different industries. So it could be a contractor with a manufacturer with healthcare.
I'm going to make you. What is it called? A group captive? Because I want to get into group. I'm going to say no for now. I want to talk to you about that later, because you're getting me confused, and I'm ADD, and I've like got so many simple. I want more simple.
Sure.
So I think big for me is like simplifying. So let's go back to the example. So there's infinitely many carrier options when we go to shop our insurance. You as the agent, so we come to you and 5 to 7 other agents, and then you guys are going out to 5 to 7 carriers, and you have to be not you have to be the first one. So if you go to Travelers, like that is it for Travelers. My access to so if I did this the opposite way, and assuming so you're my agent of record. Travelers has my policy, so nobody else can talk to Travelers, I'm sure, unless I like sign to say Chuck sucks and I really so and then so then everybody knows that they got to go elsewhere. And if I so do you like preemptively lock up all of the like if you're you know that I'm going to shop you, so my renewals are coming up in February, so sometime I'm assuming in December, November, you're like, hey, it's coming for renewal, like this is, and you're already shopping that, is that what sets conditions so that you have all your best options and none of the new incumbents that are trying to win the business can get there? Or how do you protect your house that way, or do you?
Yeah, that's a strategy. I don't do that, and here's why. I'm not going to retire on any one account unless I write maybe Coca-Cola. I'm not going to retire on any one account. So whose interest is that serving? Mine or yours? That's serving my interest. Because account carriers will let you what's called blocking the market. So submit a submission, which then they're locked down with that agent, whoever submitted it. Usually as early as 120 days, oftentimes 90 days. So 3 to 4 months is kind of the window. So would that be a strategy? Yes. If I write your account, I could go to every carrier I represent and submit it. So then if when you're talking to those 5 other agents and they go to submit them, now they have to get an agent record from you. What that does though is if I submit an account, I have to tell a story. Is it conceivable that I'm going to tell your story in the best way to 20 or 15 or half a dozen carriers? Probably not. And again, earlier on in the show, what did I say? If a carrier's seen you for 5, 6, 7, 10 years and didn't get the business, and then you need them, they're probably not going to be there for you. So if that's my strategy, I'm burning up your reputation in the marketplace.
So what we're demonstrating
But agents do it.
Yeah, what we're demonstrating is I'd make a shitty agent on the rip, but okay, so got it. So you, and so is your, so the strength, I'm assuming based on the way that you talk, the way that you approach, and the way that you're a relationally focused, insurance agent, where in which you preserve your relationship with your broker and you preserve your relationship with the client and you try to be the intermediary between both. Is that the play, or what is your strategy and differentiator?
Yeah, so it's gonna be, there's a cliche of like a pre-renewal meeting, right? And what is that? Everyone says it, but do they really do it? And so my thing is 6 months into the policy period, there's a couple different things going on. Your mod is being figured out at that point. It's to use the word that NCCI uses, promulgated. So I'm going to want to get in front of you and have a strategy around what's going on with work comp claims. Can we get claims reserves reduced or closed before that gets sent off? Because then that's your mod for the next year. While also saying, hey, where's the marketplace? Are rates going up? Are they going down? Are certain carriers denying claims that maybe they didn't before? They're getting more strict with policy language and terms and conditions. And I'm relaying this to you. So let's say you and I work together. And then I'm saying, hey, also you've been with CNA and they stood by you with that rough claim. I've already talked to the underwriter. They think maybe a 5% increase. Things could change as we get closer, but they gave me their word that unless something goes totally awry, we're looking at a 5% increase. Where's your head at? Do you want to do a full-blown marketing campaign? And if so, why? And if that, at the end of the day, you're the boss, I'm the intermediary, I'll do whatever you want me to do, but it's my job, no different than, and I'm not comparing myself to a doctor, but I'm just saying the analogy, at the end of the day, I'll do what you want me to do, but there's maybe some ramifications that you're unaware of, and it's my job to communicate those to you. And if you say, I got some clients that are like, I don't give a shit. I want you to go to every market. I want you to beat them up. Give me the best price. Don't talk to me about little nuances, a coverage. Give me the bottom dollar. I'll bring out a proposal and they flip to the page. Where's the bottom dollar? That's what they want to do. And if I explain the peril to that and they still want to go forward, I don't own your business. You do. You're the boss. But yeah, my strategy is pre-renewal meeting, talk where the market is, see where your current carrier is, and then have a strategy of, all right, if we're going to go to market, what carriers are really going to write your business, and let's limit, maybe three, four, five, unless we think you're getting a non-renewal, you're expanding into something new, you're changing your operation where it makes sense to go to a bunch of carriers, but then we're controlling that story to make sure those carriers know every single aspect of your business, not just accord forms, a bunch of paperwork that then they make their own opinion on. And the only way I could do that, because that's 30 hours of work, is having a good relationship with my client and saying, hey, I'm going to go to work on your behalf. This is what we're going to do. If you're going to a bunch of other agents, totally fine. But let's know why we're doing it and have a strategy and set expectations on the front.
Got it. And then, so let's talk. This will be hard. And if you don't mind, I need to have a broker on here because I so badly want to understand if they make their money in financial markets or in rendering services, but different conversation for a different, just want to talk about the pot of dollars. Right. And so,
yeah,
let's take, and who's your target? Like if you're looking for a contract, like who do you service the most? Obviously anybody that wants insurance, I'm sure like we got it, but like if you get to draw up your client, are you strictly construction or are you strictly small business? Do you start with revenue first, or how do you, like when you're out looking for, obviously I hit your radar, but like and you don't have to tell it to me. It's not going to change anything. I appreciate you being here, but like who are you looking to write insurance for?
Yeah, I would say my focus is construction. If there's, a bigger manufacturer that wants to enter into a captive arrangement, I have a lot of expertise in captives, so I could set up the captive for them. But as far as what I'm hunting every single day, that's contractors, and of that, I would say usually, unless it's a referral to me or a buddy or something like that, usually I'm looking for contractors that are 10 million in revenue and up, because if it's if they're paying, let's say, $10,000 in premium, I'll advise them, like I give advice to people all day long, but I'll say, hey, if you're with State Farm, give me a call. I'll look at the policy. I'll make sure it's good, but there's just not a ton of meat there for me to provide any sophistication, and it's more of a placement. Versus once you get north of 10 million in revenue, and again, if you have a general contractor at 10 million and an underground contractor at 10 million, it's two wildly different accounts to me from a revenue perspective. So dollars in my pocket, because if you're not self-performing and you're subbing it out and those subcontractors have insurance, it's really just a risk transfer play. And so even like a $10 million GCs, it would be a small account. So that's kind of the makeup.
This is canvassing nicely to my, so I've got I haven't advertised it yet, but I'm like doing a last hammer tour because I just feel like we bear all the risk and then we don't get paid. Us specialty bozos have been on the wrong end of the stick for a little while here, and that should change. So that's very interesting. But so let's stay. I wanted to just talk about totally unfair. It's going to change, but generally speaking, so let's take the 10 million because it's a nice even number. I'm a $10 million shop, depending on how I've done my mod, all of that, right? And mod rate is basically fancy insurance speak for what's your propensity to get hurt. I would, we need to talk mod, TRIR, and then there's some other nonsense. It's like, just let the motherfuckers work. But all about safety.
It's a lagging indicator. So,
yep, I shouldn't have said it that way. I mean, safety is important, but like, I think, anyway, 10 million. So I've got all of these buckets. General liability, I'm scrolling up here. So we've got general liability, work comp, business auto, umbrella, cyber, and employment liability. Like when you look at 10 million, that's a range of what's total dollars. Like as let's just say that I'm getting ready to launch a business. It's going to be a $10 million specialty construction. What should I be preparing for my total insurance bill? Is there a way to
Yeah,
do that? Give me a range. I know it's like crazy, but is it 5 to 10, 10 to 20? Do we know percentage, or do we can't do that?
you can't do that, and here's why. It's class code driven both on the general liability and the work comp. So if you're a $10 million roofer, and then furthermore, are you commercial or residential? You know, if you're a $10 million mason or a $10 million carpet installer, they're all going to pay wildly different. But I would say if you, to answer your question, and there's like 100 asterisks on this, I would say a $10 million normal middle of the road risk contractor all in, I would say it's probably going to be, 100 grand in premium or
100.
more, depending on the risk.
Okay. And so somewhere around, and I can't do math. What is it? 1%, 10% would be $1 million. Is that right? Somewhere thereabouts. And then just for the sake of like benchmarking, if somebody's listening, resident, like on the best case and the worst case of that. So this is a nice par number. I appreciate you giving it. A lot of people like are shy because somebody's going to come in here and say, Chuck was an idiot. He shouldn't have said that. It's like, shut up. Whoever you are, just shut up. We're talking. It's shop talk. So it's 100 grand, like wild reaches 300, like somebody that's like high risk, up on roofs, all self-performing, has been hurt a lot, or whatever the case may be. Like
could be more. It could easily be $1 million plus. If you got, okay, so 10, let's say your mod's 150, you're getting juiced 50%. You're being debited 50%. You're not in Illinois, and then states are wildly different, right? But in Illinois, it's a contractor credit state. So as soon as your mod goes under a 1, you could get up to a 40% contractor credit. So in this case, you're the $10 million flooring contractor paying 100 grand with a 0.99 mod, and you're getting a 40% contractor credit. If your mod goes to a 150, now you're paying 51% more because of the mod. You're not getting the 1% credit at 0.99. You're paying a 50% debit because it's a 1.50, and you lost that 40% contractor credit. So there's guys paying 30% of revenue in insurance. If you're a crane rental operation with a bunch of losses, poor risk control, and it's kind of like, hey, there's maybe 1, maybe 2 carriers that'll write you. They can name their price, and people get priced out where insurance is so cost prohibitive. They're belly up.
Got it. And so then 100 is par, and so you've said it could be a 10-time swinger if you're totally jacked out. You're probably out of business, probably, or you're in a business that's like highly insured, whatever. It's built in, I would assume, if that's what's on a, like, could I get it down to 5% if I'm super responsible and super shrewd and I'm still protecting myself? Or like, what would be the range of, like, we're starting with a par of where, like, you're, if you get that for 90,000, that's doing really good, or 80. What's the like margin of like from the par? And it's all a guess. I understand that, but like from like, and I guess what I'm trying to shape is just like how many dollars for me are realistically at stake as I'm a businessman considering this. So do I have 10? Do I have 50? Understanding I have unlimited bad, like from par down. How much juice would there be to squeeze? Realistically.
Correct. So I'll caveat with normal insurance and then just touch on captive insurance. Normal insurance, you're going to have carriers that do dumb stuff, and it's called buying the risk, right? So they'll just throw a crazy number out there to win your account, but it's historically they're not going to make a profit and they'll get off it. But in any one year, I would say maybe draw down 50%, maybe the bottom dollar. I would say it's on borrowed time, but the bottom dollar is maybe 50 grand for the sake of this example. But that's going to be, I wouldn't budget like that's going to be in the perpetuity. It's going to be really, how long is that carrier going to stay on it? Now on a group captive situation, which you got to, I guess I shouldn't bring that up because we're talking about $100,000 premium. $100,000 premium wouldn't qualify for a group captive, so never mind.
Let's do your captive because there's going to be some. I think there's going to be some people that understand it. So I don't know what that is. So I cut you off because I'm like, yeah. Tell me what a captive insurance is.
So let's pretend you're a quarter million, payer. You're paying 250 grand, and you're in a captive now. Depending on the structure of the captive, you could get up to 40% back on no loss years. So that's how you could draw down off of that average and get 40% of that premium back. It takes some years to build up because losses, it's not like someone gets hurt today and they're paid tomorrow. And someone could have got hurt today and they're not going to tell you about it until 6 months. So there's tail risk. But, once it's a mature captive, 7 years, 5 to 7 years into it from when you start it, they start releasing policy years and they stack. And on no loss years, again, captives are different, but just general rule of thumb, you got about 60% of the cost to keep the lights on, run the captive, pay the reinsurance, pay auditors, all that type of stuff. But 40% in a traditional insurance standpoint is the profit for the insurance carrier, right? In a captive, since it's your company, it goes back to you. And as long as you stay safe, that's where you didn't buy the risk. That could be into perpetuity where on no loss years, you're getting 40% of that 250 back.
And what is and captive? So what's different about and I'm sorry, I'm sure you said this, but I was probably not listening well. What's different about self-performing versus captive insurance?
What do you mean by self-performing?
Or self-insured. If I'm self-insured, like at a certain point, I'm not considering this, but I've been around some bigger businesses where they self-insure themselves, and that might just be for the Benny's side.
This is where there's so many terms that are used interchangeably. I would argue even the Coca-Colas of the world, they may say they're self-insured, but at some point they're getting reinsurance to maybe it's at $5 million. They'll take the first 5 million slug, but if it's an $8 million loss, 3 million is being transferred to an insurance carrier because it's economics, right? At some point, the money you're saving versus the risk, there's going to be a break point. And then you're just going to buy the reinsurance and that's part of your operating cost. And on a rainy day, if it gets tapped 3 million there's punitive damages of trucking firms getting nuclear verdicts of $300 million. Who wants to tap, even a publicly traded firm, who wants to stroke a $300 million check if they could have transferred that for 300 grand? You know what I mean? So when you hear I'm self-insured, especially like if it's a Vista group, unless you're talking about, NVIDIA or Tesla, something like that. If they say that, they're either in a group captive, they're in a large deductible, or maybe a single parent. So a single parent is a self-insurance for just you. But even still, you're getting reinsurance above a certain threshold, and you're just funding deductibles through the captive. And that'll be another episode. That gets very complex, but you got to be $1 billion plus to even entertain that.
And then, so just to make sure, and I don't think I did hear it right, but so say let's just use a round number. I'm $300,000 in premium and 40%. I get a 40% drawback, assume so 300, 30, 60, 90, right?
Let's just call it $1 million for easy math. So 400 grand could come back to you on $1 million spent.
And that's basically assuming that I don't have any, so the 400 that's if I have a claim, that's where it comes out of, and then the rest comes to me. Am I getting that right, or am I jacking that up?
No, so that's on no loss years. Then there's a whole mechanism, and again, no captive is created the same, right? I equate it to like flavors of ice cream. Just because you like vanilla doesn't mean chocolate isn't good to someone like me. So you can't just broad brush this, but a group captive, there's going to be a layer split up usually into two, if not three different levels. So your frequency fund for claims under, 150 and under, let's call it. Your severity fund for claims 150 and a dollar up to whatever the rev limiter or the captive is, usually either 300,000, 400,000 for bigger, more sophisticated captives, 500,000. Then there's a reinsurance layer that attaches to either 300, 400, or 500. So if you have $1 million loss, you're not paying that whole $1,000,000. You're paying your frequency layer, then you're tapping into severity, and then it's passed to the reinsurance. And the other members, group captive, they share in that severity layer. So they help subsidize your analogy of the neighborhood, and you want your neighbors to help you out. That's essentially what the group captive is. So they step in and subsidize a piece of that. Then let's say it was a $500,000 slug in this captive, 500,000 to $1 million is reinsured. So you're not paying that. And then $1 million plus is your umbrella. So whatever your umbrella limits are, that would drop down and take on that risk. So the biggest misconception with group captives is a company paying $250,000 thinks, oh, if I have a $5 million loss, I got to pay $5 million, so it doesn't make sense. And no, that's not true. If you have a $5 million loss, you're probably paying, maybe 200,000 of that, 250,000 of that, and then the rest is transferred. Where you get killed in a group captive is you have 10 $100,000 claims. Then you should not be in a group captive if you have a lot of claims. But if you have a one big pop every 5 years, a group captive could still be really good. But if you can't control your losses and you got $10, $50,000, $10, $100,000 claims, whether it's on the comp, general liability, then you got to get your house in order before you graduate on.
I mean, I think you just said it. If you have a high frequency, like, is there any, once you're at that level, is there any reason you wouldn't do a group captive besides I'm anticipating a high volume of reasonably sized claims?
Yeah, I mean, if you're CFO, there's present value of money, right? So you're going to tie up a letter of credit or cash because if claims happen, they don't want you to be a credit risk to the other members. So they're going to secure, let's call it, and again, it's off of your premium, but let's say if you're paying $1 million, maybe they want to tie up 250 to 300,000 of that million to earmark for losses. So if you say, hey, I could deploy that 300 grand in a better way than the upside of getting 40% back on that $1 million, that's a business decision for the owner and CFO on deploying capital and return on capital. The other would be if you're looking to sell in the next 5 to 7 years, it's not like it makes it impossible to sell, but it's just another thing that could be tricky. So I would say definitely if you're looking to sell in 3 years, I wouldn't entertain it unless you're looking to go maybe ESOP, but if you're looking to sell a private equity, publicly traded, even a strategic buyer, maybe it doesn't make sense. Or if you're the guy or gal that wants to shop every year and just move around, I mean, once you're in a captive, you're kind of there. And I think the benefits speak for themselves from a savings standpoint. It's kind of a built-in peer group for insurance. You could fight claims better because you're the owner of the captive. So it's easier to fight fraudulent work comp claims because you appoint who handles the claims. And if you don't like how they're doing it, the group could pick someone else and you have expense dollars that you could choose to do things in versus if you're insured with name the carrier, they're the boss, right? They say if they're going to fight the claim or not, that they own the program, not you.
Got it. Well, that's super helpful, man. And yeah. Is there anything that we didn't talk about that you'd want to talk about?
Just I would say ESOPs. I'm passionate about it. Like I told you, I'm going to be starting a podcast on it, and I think it dovetails into construction really well because a lot of people, it's multi-generation businesses or someone that bootstrapped the company, out of a guy in a truck with a lawnmower, and now they've grown it into something, and it's their name on it. So I would just say any of your viewers that are looking for an exit, don't think that you have to necessarily always sell to private equity or a publicly traded or even your biggest competitor. There are other options that could keep your legacy moving forward and reward the employees that help you build the company.
Yeah, I forgot. That's what you hooked me with, was anti PE, which I think I'll just say I haven't said it on the pod yet, but I think I gotta wait. I gotta wait. If there's any private equity people that want to tell me that they're like private equity is good for the country, you should come on the pod and we should have a conversation. That's what I'll just leave that right there. So much more I want to say. But yeah, ESOP is awesome. So tell me, for you, where it comes from. What is that, just a passion project, or does that marry well? Do you guys do something with ESOPs? And I don't know if you listen to it, but Scott at FMLI, like those guys are, I think it's FMLI. FMI. Yeah, thanks. I freaking love his stuff. But yeah, so I was going to bring them back in, and it sounds like you're starting something. And I had mentioned, like, man, I just wanted the people with influence to listen to me, and I show up. I don't show up like I don't brand myself as a goddamn $100 million. Like, I'm a $100 million CEO. Let me change your life. It's like, fuck off with that. Like, I'm a business owner, and I don't have a personal brand. And I couldn't get anybody to listen. Right? It's like I offered to pay for advertising on the shows that I didn't want. I was like, I don't want to go on your show. I don't want anybody to know my name. I would just like to talk to you. And like, dude, I'm a salesman, like, just like you. I get to people, and I couldn't get, like, no play, man. Like, videos I sent, nobody wants to hear. It's like, and I think it's a tragedy for us, is like, I think, and I'm not saying I'm a good voice, but like the people that aren't in social media, we don't hear from. So anyway, I started this because I think the trades needed a consolidated voice. I think they're absent from advocating for themselves, and I just see a lot of opportunity. But so if you wanted to leverage something, I mean, you can do it all, whatever. I built this for the people. So anybody that wanted to have a voice didn't have to go start a goddamn podcast in order to have a goddamn podcast. So I'm not saying that we have the perfect system yet, but I will have a studio. It won't be in Chicago. It'll be out west with me. But tell me, so that's just caveat. If you want to talk about that, cool. If not, no, the invitation's there. But yeah, so ESOPs, is this a passion project? Is there a way for you to monetize? And I don't mean to say it that way, but like, if you're getting ready to do a podcast, you're going to be investing time and capital. What's the origin genesis? I mean, and I think it's great. Is it just because you think it's good for you're watching, as I am, a bunch of founders that don't have an out because they are the business, that they might have a better play and they can. So yeah, tell me about why you're passionate about that.
Yeah, 100%. First of all, thank you for that offer. I appreciate it. And it was the reason why I switched brokerages. It's hard. You leave behind a book of business. You're tied up by a 2-year non-compete. You're told from these publicly traded firms that it's the best spot. You have every resource in the world. And so I have to suspect contractors are told the same thing. And so I switched to Christensen because we are 100% ESOP owned. And now I've been here and I see it, right? The lady who does the certs for me for my clients is an also owner. So not only is she less likely to leave, so there's not going to be churn with my service staff, she's also an owner. So she's going to treat the account differently than someone at a competitor brokerage that's just there for a job. If they get offered more, they'll probably leave. They don't feel as valued. And so within the construction industry, look at how many contractors there are, even multi-billion-dollar ones. It's their name. And if you talk to any good operator of a construction firm, at least in my opinion, they always say, without the employees, this is nothing. That's why it's hard to sell a construction company. You can do an asset sale, you got a bunch of equipment, but unless it's a service-based, they got repeating revenue, publicly traded, it's whatever IDOT work you get, right? It's hard to look into the future and know what that's going to look like. And so I just see guys selling to PE firms, and then you talk to employees, because I get close. I'm intimately involved with like safety managers, CFOs, project managers. You get to know people at these firms that you work with, and 5 years later, a lot of them are gone. And it's like, what happened? Well, they started messing around with benefits, or they put more pressure. They wanted more revenue per employee. The name obviously changes. So you'll see, let's say I own Mazzanti Plumbing. All of a sudden, Mazzanti Plumbing, a division of, or whatever. And then 3, 4, 5, 6 years later, Mazzanti Plumbing's just gone. and it's a shell of itself. And so I've talked to a lot of contractors that think, oh, if my exit strategy, if my kids don't want to get into it or I need a liquidity event, I got to sell PE. It's the only way. It's not. And I think a lot of people keep it under wraps for self-serving reasons. And so I'm not trying to monetize like me doing a podcast. I'm always trying to think of like insurance, the placement is the placement. What other value can I bring to my customers and prospects? So they're like, yeah, Chuck does insurance, but like he helped me with the sale of my company and I never would have known I could go ESOP. Or you know what? He introduced me to an accountant that knows what they're doing and they actually care. Like I want to kind of be good for the construction ecosystem. And if I end up doing insurance for the people, great. If I don't, so be it. And so that's the reason behind it. I see the value in the wealth creation. I mean, if you just look at average balance in a 401k to an ESOP balance, it's 7 times on average bigger in an ESOP balance. So that's wealth creation for everyone in our community to retire and not be struggling or have to go work at Home Depot when they're 80 because they have to, not because they want to. And so I think it's a big thing that could transition a lot of things, both locally as well as preserving family names of companies that have been around for generations in some cases.
When did you make your switch to Christensen?
About a year and a half ago.
And like you're obviously going to have to, you have to say this, but it noticeably different, like the ethos. I mean, obviously company culture, but it's completely different than the I call them institutionally capital, like the institutional investor run big firms. Like you can see a difference.
Night and day. For instance, this podcast passion project I want to do, it's a difference between being able to do it and probably, no, you can't do that, Chuck. Or if you're going to do it, you can't swear. It's got to go through compliance, not legal, all the red tape. Like Christensen's like, be ethical, obviously, but hey, that's what you want to do. Great.
That's rad, man. Well, I don't have any sponsors for this. So if they wanted to just sponsor the Atomic and you have a series, it's I don't want to be hard selling you. But yeah, that'd be cool, man. I'm like passionate about small businesses, and I think ESOP is like, I think it's the most ethical exit. Anyway. I'll try to bring in an antagonist. We'll try to bring in a private equity dude that's going to tell me that private equity is good for the country. We'll be fair for today, because I have thoughts, deep and very rooted. But I'm a big like curious. Compassion is really good. So maybe private equity is doing wonderful things for the country. So
hey, nothing's 100% good or bad.
Yeah.
So
yeah. Well, dude, thanks for coming on. Anything else like self-promotion wise that you want to get out there that we didn't hit on? Any conversation that I missed that you were hoping I might drive at? Any hanging chats, so to speak?
No, man, this was great. I appreciate you having me on. I know insurance could get pretty technical, so we touch on a lot of things. I'm happy to come back on if anyone wants to do a deep dive on any topic, but other than that, just appreciate it and happy holidays, man.
Yeah, dude, thanks for being here. One thing I would ask you for, if you don't mind, is in your network, I would love to talk to I'd love to talk to a broker just to like kind of peel back a little bit of that veil and that perception, and then the employee Benny side. One of the questions I wanted to ask you, like HMO versus PPO and all of those kinds of things, and I just figured that was out of bounds. And then third and final thing, like my heart is for anybody that's lost and broken, but particularly like I think business is so hard from that 100,000 to 2-3 million. Like I think that's like the make it or break it. It's just a goat rope. So if you have your referral base of people, if I come to you and I'm too small and you do I'll advise you, but my skills are better suited for someone that's got a more complex system than you. Love to know who they are. I'd love to invite them, and I'd love to promote them in the comments, because I suspect a lot of my audience, I don't track my audience. I just say what I need to say and we see what happens, but are in that smaller range. So if there's anything you want to pass forward, that'd be cool to just put a link up.
Yeah, 100% I will.
Okay. And then Chuck, you said we shouldn't renew every year, so maybe we're not going to renew this year, but we'll make sure that I got to go be fair to my existing broker. I don't even know who it is, because I'm just like, dude, this is a CFO president problem. I don't want to know. Like, I want to go make deals and make my people some money. So that's not the right mentality, but it's not something I'm good at. Thank you, the listener, for tuning in. If you want more from Chuck, you should put it in the comments. If you liked it, you should say so. Comment and subscribe. I don't know if that's a thing, but I think that's a thing. I appreciate you being here. Appreciate Pineapple keeping us rolling, and go build better. We will see you next time.